Assalamualaikum guys. I just wanted to follow up on several videos that I've made for you guys, titled "Profession, Career, Business, Finance." You could call them anything you like. Where my intent was to share with you guys my journey of well, most of the videos have been my journey of life with you guys. Whereas I wanted to share with you my business experience, what I've learned, where I messed up. I talked about where I invested in publicly traded companies, as well as being a small business owner. Investing in properties such as where I had a motel before, I had several retail businesses. Now quick service restaurant franchise, having a few of those locations, and likewise investing in a couple of apartment buildings. So I would like to share with you guys my experiences in each of those. I had talked about the stock market or equities market with you guys, which I just wanted to have a follow-up thought with you guys. Uh, Remember where I told you to prepare yourself, to put yourself in a position, because you got to get capital to invest. Where are you going to get that from? And the traditional approach is go out there, get a choose a good career that's going to pay you well, and then don't start living it up. Live below your means, save money so you could pump that into investments. Where after a number of years, whether it may be 5 or 10, or whichever salary your job is giving you, your investments are giving you the same income. Which gives you options. You could reduce the number of hours work, or continue doing it if you love it. So with that mindset, also if you recall, I told you guys, where we fit into one of four categories. Most of us start off as being, employees, then we get into possibly becoming self-employed. Then, but where we really want to be is investors and business owners. So, okay, with that out of the way. I had talked about this already. I shared with you my experience in investing in publicly traded companies in the stock market. Well, full disclosure, I hold a company I've held for, I guess, over 15 years now, which I'm down. I would say down 97 to 98%. Well, full disclosure again. So every dollar invested in this company, if I invested $1, it's only worth 3 cents. So am I the kind of person you want to be listening to for advice? Well, sharing my journey of life with you guys, sharing my journey of business with you guys. I would say it's been more than 20 years with that experience, but I still hold that today as a reminder to me how not to behave. What I'm trying to get at is you have to have a business owner mentality. There's no such thing as day trading, market timing. I'm just not smart enough to do that. So my advice would be to you is learning to be a business owner, and as I said before, whether you own a small business of some sort, or you're invested in a publicly traded company, you're a business owner, and then you have to learn to how to properly value a business. Whether it's motels, retail business, quick service franchise, or apartment building, or a publicly traded company, then the method that I recommended to you was, Ben Graham's, book written, 70, 80 years ago, Intelligent Investor, that type of, school of thought is what I'm talking about. Okay, so this company that I told you guys, what was it? Come to think of it, it's been more than even 20 years, I would say. When I purchased it, it was one of those penny stocks. People were talking about it, and oh yeah, you could make a bunch of money. So I did, and I just down it went. At that time, I had several years before that I had read, Ben Graham's book. Well, I reread it again and decided to change my ways. So I became a business owner, to think like a business owner before I invested in anything. So I'll use some jargon, and a few comments about that. Whichever business you guys want to get into, whichever profession, you have to be able to understand, the common terms. You have to speak the language, or people won't take you seriously. For example, in the stock market, anybody could go out there and pull the trigger, and it doesn't mean that they should be buying equities. They should be buying stocks, but anybody can. So when I say think like a business owner, another way to say that is, being long only. When you're long only, you buy a good business, and your intent is to hold it for long term. What's long term? Well, 3 to 5 years minimum. As low, and or if your thesis holds up, for which you purchased this business for. Again, we're not going to be day traders. This is in terms of equities markets. We're not day traders. We can't time the market. As a matter of fact, as I told you before, the best of the best money managers who have, billions of dollars under asset, management, they can't even beat the benchmark. So how could we do it? So what we want to do is, learn to properly value a business, and then, look for those businesses, businesses with good prospects, good competitive positions, good future, good competitive, being able to, analyze a business, that is a wonderful business ran by good leadership, and hold those businesses for a long time, and not be market timers. So that's what I did. Hey, if the benchmark is, what is our intent really? Our intent really is to compound our money, our funds, quickly as possible, but with less risk. I want to introduce you to risk as well. Well, what does that mean? You could go out there, buy these penny stocks, or, it's like throwing a dart. You know how that goes. In a bull market, when prices are on an upward trend, everybody's making money. It just, market is, lifting everything. So you seem like a smart guy. But after a few years, I realized that, hey, how do you make money? If one was to do this in a serious way, you have to be able to make money in a up up, down, and flat market. Well, that becomes a big challenge, but it can be done. One that will take some study, more effort on your part. So that's a challenge that I wanted to take on a few years ago. So how do you make, in the equities market, in the publicly traded companies, stock market, how do you make money? It's easy to make money. Everybody's doing it when the market is going up. How do you make money when the market is flat and the market is down? Well, we know historically what the benchmarks are. The benchmarks may show one thing, that you could, if you invested over the last 100 years, you made, this is what you made, whatever that is, 8% or so, thereabouts. But the fact is, if you look at the brokerage statements of most of people, they haven't made that. They haven't even kept up with the benchmark, because they're constantly buying and selling. Remember I told you earlier, because human tendency is to always be doing something. Well, first you make some good decisions, and then you have to prevent yourself from doing dumb stuff, from doing stupid stuff. With activity, when you're constantly buying and selling, nobody wins other than the middleman, the broker, and the tax man. Buying good businesses, holding them for a long time. As long as your thesis for which you bought that business for, a publicly traded company I'm talking about, holds up. You hold on to it. So then what? Well, I'm complicating things now by telling you that to make money in a not only in an up, down, flat market, when you hold a business for a long time, you'll do well. But when your intent is to compound your money, on a rolling every 2-3 year basis, you have to bring in other strategies in addition to being a long only, being a business owner. So those strategies were, in the beginning, were kind of challenging to wrap my head around. Some of these strategies are, options, hedging, and shorting. So most of your portfolio, most of your funds, by the way, even when you're fully invested, you want to have some dry powder. I would say 20% is a good number. Even when you're fully invested, you should have that much, to take advantage when things go on sale. Have some dry powder. Now, what are these strategies? So, you would say majority of your funds are long, where you're a business owner. And then you're using these other strategies, to make another, say 2-3% a year, maybe 3.5% a year, in addition to, what your long businesses will give you. What they give you, well, it's we don't want to think about just appreciation, though we want that. There's yield, there's dividends, and in addition to capital appreciation. Now, we're basically looking for income strategies that are more short-term in nature. And those are what? There are quite a few option strategies. I mentioned in my previous videos, and remember, options are they're two sides of the contract. There's a buyer and a seller, and then there's an intermediary who brings the two parties together. With options, and these strategies that I'm talking about, I will talk about them and then how I feel about them today. I want to add that in there as well. But I just want to introduce you to these things, though, And again, am I the kind of person that you want to be listening to who's down, 97, 98% on one of his investments? Well, that's for you to decide. I'm going to share my journey, in addition to my life's journey, and my business journey as well, my investment journey as well. In options, I've learned pretty scary concepts to begin with, but then I learned that if you're sensible about it, if you're conservative, you do have to take risk. If you're conservative about it and don't get greedy, you could make a decent return. In addition to being a long business owner, you could make another, I would say, about 3% a year in an up, down, flat market by implementing these strategies that I'm talking about. Option strategies or futures contracts. And then, I also told you about, shorting. What does shorting mean when you short a business? Well, it's, all the things that I told you were when you buy a good business, all of the positive things, though, when you do its competitive analysis, it's prospects in the market, it's competition, it's future, it's management, et cetera, et cetera. And when you short a business, you flip that upside down and you look for a terrible business. A business trading at, for example, say $100 today. And through your research and study, you find that, well, this business is overpriced. It's not worth that. You think it's worth, it shouldn't be worth $100. It should be worth, $75 or $50, because that's, where you're, with your valuation, that's what you come up with. And eventually, market will recognize that. There could be a disconnect in what price the market is putting on it, and what the intrinsic value of this business is. So your job is to be able to, look for the ones where there's a disconnect between the two. When you short a business, basically what you're doing is you're betting against a company's demise. We'll talk about whether that's right or wrong. So first I talked about, majority of your funds, I'm talking about portfolio strategy. Most of your funds are tied up in long businesses where you're a business owner, and then you're trying to come up with another, 3% or so per year, with income strategies. And one of those is options. Then I talked about shorting, and then also talked about hedging. Hedging is, basically buying yourself insurance. So what happens when you buy, car insurance, home insurance. When do you benefit? When something bad happens. So likewise, when you, hedge your portfolio, there's overall portfolio, say it's, I'm just going to throw numbers at you, because then, portfolio makeup is a totally different conversation, and you know, I'm just trying to summarize, short summary of it. But you know, that may be, this may be too boring. You know, even especially that, you know, again, to me it's fun. It was fun because I had to support myself. I had to, you know, support my family. So anyways, majority of your funds are tied up long businesses, and you know, the other 20-30% could be, you know, tied up in these are, you know, loose percentages, you know, into these income producing strategies, and certain percent of your portfolio could be hedged. So how much of a hedge? You know, it depends on whether you're bullish or bearish on the market. So if you hedge, you say, okay, you know, this percentage of my portfolio is into long only. I want to hedge that. So when the market falls, majority of your funds, you know, because that's where your you know, capital is tied up, your portfolio goes down, but you know, your hedge goes up. So you know, that's what insurance is for. So that at that point, at a higher price, when the market is down and the portfolio is down, the hedge is up. You cash out of the hedge, you know, and you invest it into, you know, your great businesses, hopefully that you picked at discounted prices. So when the market, you know, comes back, it lifts up and you're in a different spot. So anyways, that's overall portfolio that I'm talking about. You know, so I came to a point where I realized that after I'm summarizing over 20 years of you know, experience in equities markets in this short video, and a lot of things that I'm leaving out, unless, you know, at some point in time you guys want to talk about it. So I realized that, man, you know, business only, and with these option strategies, you in theory can make money if you're sensible about it, if you're conservative about it, you don't get too greedy. You could make as much money in the market as you want to. Well, you know, also, as I told you before, you know, this human body makes money and money makes money. You know, so as you start earning some you know, funds, you want to, you know, pump that into investments where, you know, your money is compounding. Of course, we don't, you know, hold CDs or interest. You know, it's a separate, you know, conversation. We don't do that. So in businesses, so likewise, these strategies that I'm talking about, after working on them so much and coming to that conclusion, man, this is pretty good. You know, that hey, that now making money, well, 10% is a good number, for example. When you can make money, when you can make 10% on an up, down, flat market, gosh, you know, I realized that, hey, I could be sitting anywhere in the world, and support myself. Well, some number of years ago, that's kind of the predicament that I was in. But you know, talking to mama, you know, but you know, there's, you know, with the young family and growing family, expenses always increasing. Well, you know, you could just, you know, how much do you need to make? Well, you know, do you have to have you know, $100,000 a year to pay your bills, or you know, 200 or 500? So likewise, accordingly, you need the portfolio, that kind of portfolio you should have, you know. So if you have $1 million somehow, you know, you have this capital, that $1 million portfolio will produce you $100,000 a year in income. And you could be sitting anywhere in the world, whether on your beach or anywhere, you know, somewhere else, and you know, that $1 million portfolio, if you know what you're doing, can provide $100,000 worth of income. Well, are you okay with that? That's a lot of ifs. Well, no, I want to do this, this, and this. I need to make, say 2 or 3 100K. Well, then you should have a $2 or $3 million portfolio. So I'll step, one more step. Then I realized that I came to the realization that what these strategies really are. I know my different experiences that I shared with you guys, where I talked about where most of my life, first part of my life so far, I felt like God said to go this way, and I had been going this way. So I've been trying to close that gap. I may never be here, but close as possible. When I meet Him, He'll forgive me. So I realized that how I make a living for my family, that became even more important, or much more important. Even to this day, I fixed one thing about myself, and there's something else that needs to be fixed. So well, with options contract, I realized that I used this example before. If I'm going down this, I hear that in this dark alley over there's some some people who aren't very bright, and you could pick their pockets. Should we do that? Well, us being people of faith and trying to please God, well, the answer is clear. Likewise, when you're shorting a business, I realized that I cannot profit. I cannot bet against an individual or company's demise and make a profit at it. So, well, after discussing these things with Mama, we said, well, we can't do any of this. We could only be, business owners. Basically, in terms of equities markets, publicly traded companies, we could only own businesses, permissible businesses. Obviously, what they are, and that's it. And around the same time, I realized that my gosh, even greater than that, my better returns have been where I've purchased a business, with real estate. Basically, I next few videos I'll be making with you is where I'll share with you my experience in several retail businesses, motels, and then quick service restaurants, and then lastly some apartment buildings. I want to tie all this together, stock market separate, that with these different businesses that I named you, I feel as if today that I've been in the same business all along. That, basically that's been real estate. These other stuff that I mentioned, whether it's a motel or other retail business, or it's a franchise restaurant, or it's an apartment complex, I've been in the same business all along, where I purchased an asset, real estate. It happened to have different types of businesses in them, and which produced cash flow for me and my family to live off of after paying all the bills. And inflation happens. You hold on to this for 3 to 5 years, because of inflation is it's a booger. That's where prices of goods and services increase over time, and just like groceries cost more, housing costs more for us to live. So the properties that you own, they're worth more. And you improve that business, improve the sales, watch your expenses, income producing properties that I'm talking about. And then, you dispose of them and getting into a different, more attractive, with a higher profit potential. So that's the kind of stuff I'll make a few more videos on. But I had a little bit of time. I thought I record this for you guys. So that was my experience in equities market, and where I after many years of in the stock market, I realized that after learning these strategies, after really becoming, oh man, I found something where I could make reasonable living by doing this. But then you coming to the conclusion of, well, I can't do that. Becoming a person of faith, I chose not to do those things. Now being a long only business, I need to have a larger capital base and the larger capital base, I concluded, was to get to that point was I'm better off investing in these businesses, real estate type of stuff, to get to a point where anyway, that's the next conversation. Anyway, guys, this video is way too long. I didn't think it was gonna be. Anyways, that's all for now, kiddos. Love you guys. Assalamu alaikum.